Good evening, it's Gene Inger. This is the Thursday final. I'm going to have to make this quick because I spent much too much time on the text tonight and I have an engagement. But suffice to say, I'm not engaged, just an engagement. Suffice to say, I don't know if it's because there's a whole lot of open interest on the put side. I don't know if it's because of a letter that was inadvertently included in a report by a Swiss bank a couple of weeks ago. I don't know if it has to do with everything we've been talking about for at least 6 months, including rallies that we thought had zero chance of sustainability because of the backdrop problems and credit crunch risk. But I think we have a better idea why now. The Fed was engaged in the most liquidity injections. One source, I have not confirmed it, has said since 9/11, and I mentioned earlier in the week something similar, and we might have an idea if they perceive something that has implications for global financial markets. Bloomberg has carried a piece in which they talk about the keen interest of the securities industry in the financial guarantors remaining healthy and rated AAA. They would not have to look far for making sure demand was met, and at the same time, if you get into a situation where states, municipalities, school districts can't raise money for roads, for buildings, for maintenance, that's a disaster. And obviously government would step in. How they would step in, because if you go back to the 70s, such things as MBIA and AMBEC were established, I believe, essentially to do that. So I really don't know what the bailout form would take. It would be a politically charged and engineered solution, but it would be debates, and it would be hearings, and it would be a congressional battle, and it would probably not, even though you would know that something was coming, just like you did with LTCM, it would not happen instantaneously. And at the same time, you have yours truly having an opinion that something could happen in this market that would make, I don't even want to say it, but LTCM looked like a picnic and the crash of 87 looked like a rehearsal. All right, I said it. I don't know that that will happen. I don't mean to scare anybody. I'm just putting it out there. If Bloomberg can put it out there, I can put it out there. And I would say that banks themselves might normally be called in to back the various entities because it would be cheaper than additional write-downs, but I don't think the banks are capable, because I think not true numbers have, in many cases, not all, been disclosed. And I think that you probably have, because of that, an amount of leverage that exceeds their liquid assets. And this is the kind of thing I was alluding to earlier in the year when I said, when this hits the fan, the liquidity, the phantom, will evaporate, and people will see it for what it is, and it won't be pretty. And there will be no Chinese stocks in isolation from what's going on in America, which is 40% of spending in the world consumer-wise. There will be no Europe that will be in isolation, which will be reversing its policies from fighting inflation to fighting deflation. There will be no argument about a growth recession, because it will simply be a recession with risk of turning into something worse. Probably won't, because there will be the bailout very quickly, because people know from the 1880s and the 1920s, and if they don't, they should be impeached. And if they do know, they will authorize the enactment and the movement to engage in whatever must be done if we have the remaining capability to do so, given not only our deficit, but our national debt. And at least, even if we write off the national debt, what a way to, I'm joking on that, I think. Got to take this lightly. That's why I joked in the text and said it's good that I paid for my retirement villa in the Banana Republic. But I don't have any villa anywhere. I just was being cute. I don't think that's what's going to happen, but I think people might be afraid of that happening. And I think the issues do go far beyond any conception or misconception that we, Bloomberg, CNBC, Fox, anybody else might allude to. And I think that the concern, though, about what are called the monolines, which are those that provide the guarantees, and even though I dated the daughter of one of the largest muni bond dealers in this country at one time, I didn't marry her, and I don't know that business. So I'm not a municipal bond expert, but I do know that losses could be so potentially huge that it would be this whole thing would spill over in so many ramifications and could threaten so many retirees, muni bondholders, states, and municipalities, which would be prevented from selling debt, that if correct, there would have to be a solution. But before you get to the solution, there'd have to be sort of pain, like a magnified version, maybe, of what happened at one time in New York City or what happened in Orange County. It gets rescued, but that doesn't necessarily make whole those that are caught in the vortex of the storm. With that said, Dow Industrial Average is positioned for collapse immediately. That does not mean it will happen. You've got an expiration. All kinds of things can happen, but it might put downward pressure on it like it did last time, in which case tomorrow could be 300 to 500 points down in the Dow. Doesn't mean it will happen, but could be. Today failed after more Hail Mary efforts and was down 120 points in the Dow. We don't have much time. I talked too much. So the S&P at 1456.80 is down 180 tonight. There is your daily chart. Here's your intraday chart. Here we have the Globex action. Not a whole lot happening there. Let's go back to the daily. I'll look at the weeklies on the weekend report. I think this is down, up, down, bounce, fail, smash, but we'll see whether that happens tomorrow or not. If it doesn't happen tomorrow, then they're just trying to get past expiration, but I suspect that the powers that be may not let it get past expiration, and I don't want to be a cynic and say that's why certain stories are out now or will be out in the morning in this regard, but nothing would surprise me. The dollar, I think, is bottoming. I've said that. I've argued that. Look at that. Will you look at that? And that kills the earnings-related phony currency translation scenario for the big cap stocks, up 193. And part of that is because Europe's going to reverse policy. Bonds, up a tick. Crude oil, up 0.07 this evening, I guess. 93.50, the last is where it's at. Oil index down 34, gold rebounding 530. We are only going to look at a couple financials tonight. Bank of America down 165. JP Morgan down 146. During the day, we called all the bank rallies to fail, and they did. Merrill Lynch down 68 cents. General Motors, we better take a look at. Down 106. More discussions about the impact of their issue regarding the GMAC situation. GE down 70 cents, even though they minimized as best they can their situation. And Apple Computer down 181. I suppose I have to look at little tiny Pure. Where is it? Here. Down 50 cents at $8. Finally, a little pullback. Again, testing the daily moving average line. Absolutely no problem there as far as I know. I think what's going on there is maybe people are selling whatever they have to sell if they got margin calls or they hold other positions, so they sell what they own that's 100% paid for. If so, that may provide a buying opportunity for new members that are interested. But again, we're playing with higher levels, so we'll see. Do I still think the stock's going to 9 to 12 or more in the weeks and months ahead? Yes, I do. There's no change in my perspective at all. And SanDisk, which we just started keeping an eye on, continues to work lower by 77 cents today. No more needs to be said about it. I continue to expect it to work lower, and at some point we may have interest. Our interest will all depend on what and when, on what the stock market does. And we think the Dow will break 13,000 tomorrow, and possibly aggressively. Good night.